What's up, guys? Today I'm going to teach you about liquidity. What is liquidity, how you use it in the market, and just overall what exactly it is. Now, liquidity is essentially resting orders. So there's four ways the markets move, and I'm only going to teach you one today, and that is liquidity. So let me fix my cam a little bit. There we go. It's locked in. It is called liquidity. You have buy side liquidity and sell side liquidity. Now, for example, buy side liquidity is going to be your top liquidity to make it simple, and sell side will be your bottom. So, for example, this would be your buy side, and this would be your sell side. Now, you might ask, what is liquidity? It's just resting orders that never got filled. So what moves these candles up and down is people buying and selling a share of the stock, or like a contract, for example. So for someone to be able to buy a contract, someone else has to sell a contract. So there has to be kind of an exchange between two people. Now, back in the day, it was a little different because you would have been in the New York Stock Exchange dealing with that, like inside the big floor with a million people, and you'd have to like personally do it. But for us, we're very lucky because it's way easier, because it's a click of a button for us. We don't have to worry about what's behind the scenes and what's actually happening to make the process go through. So it's easier for us. And that is one of the reasons why it moves the market. And there's an easy way to think about liquidity. It doesn't have to be a super complex thing. Think of liquidity as two magnets. Actually, let me rephrase this. Think of liquidity as grabbing orders. For example, we'll use this example right here. So any significant swing low, which is a low by itself, is liquidity. So for example, look, this was our sell side liquidity. We came down, grabbed all these orders, put them in a bag, and then we went higher. That's one way to think about it. And then, for example, now you would expect to go to this one. You expect, once you take one place of liquidity, you either expect to go through it or reject off of it. There's only there's three ways you could consolidate in it, but you're either going to reject or you are going to continue higher. Now that is a prime example right here. As you can see, this was our clear sell side level. We came down, took it by a tick. We came down, scooped all these orders up, all these orders that made this move go up. We picked up a bunch of people, and now we have a lot of momentum. So that's why you see this gigantic wick to the upside and the continuation higher. Now, there is many different areas of liquidity. It depends what time frame you're on. Kind of almost with everything in the day trading world. You can find everything on the time frame. It just depends. So on this time frame right now, our new sell side would be this level, and our new buy side would be this level. So where would that be on the weekly? It's the same thing on the weekly, but look, we have internal buy side. Now let me explain what internal means. It's very simple. So look at this model. You have outside, outside, inside, inside. So you would call this your external liquidity, internal, internal. So now everything inside of these big ones is going to be internal. Now you would never really mark out monthly liquidity because it's going to be a while before you get there. So you can keep zooming in. So we're on the weekly. Let's go to the daily. Oh, not much. Looks like we just bought up of this one. Now you want to make your liquidity by itself. Could you say this is liquidity up here? Yes, but it's not as relevant, not as important. Looks like we're putting in a new, this would have been your buy side level, but it just got taken. So you took internal liquidity. So when you take internal liquidity, what are you expecting? You're grabbing a bunch of orders from the top and you're expecting to fall, essentially. Now, that's when you come in and you would add more confluence. Where do you expect to fall to? Potentially this imbalance. We'll cover that a different day. So we can zoom in even more to the 4-hour chart. Oh, look at this. It's still the same main levels. So in reality, you would never measure monthly because that is way too big. We're intraday traders. So let's get rid of these and act like we're measuring from daily end. So where would your internal liquidity be? Well, if we go back before this was taken, if you were looking at this chart right here, where would your internal be? This would be your internal buy side. And you can get way more complicated, and there's another term for these right here, but we won't get to that today. And where would your internal sell side be? You could call it this one because this low is very by itself. That's the way you want to look at it. Another thing with liquidity that I think has helped a lot of people that I talk to in my Discord about liquidity, it is free, you guys can join it. But think of liquidity as magnets. So we zoom in, where's the liquidity? Still this high, but we're looking at this high. So now we're really getting into the intraday type of liquidity. You can just keep zooming in and marking out these levels. So this was your internal sell side. This is also internal. This is more external. This is external for this one, but internal for the other ones, if that makes sense. So as you see, we come down, we take internal sell side liquidity. Now where do you expect price to go? Oh, price goes to internal buy side level. Now where could we expect price to go from here? Look, we put in a new low, so this is our new sell side liquidity level. Think of it as the valleys and peaks, essentially too. Look, we took this liquidity. Now where do we expect price to go? Oh, we also have an internal level here. Do you see how you have a bunch of liquidity levels, but there are main ones? Like this is the main one for this model. For this model, this is the main one. Like this is the external one. These are just internals. So if you were to zoom in even more, you would see more. What is happening here? Well, we just took buy side level. So without looking at too much more, we just took buy side. What else can we expect? We can probably expect to reject. Oh, look, we reject. But what do? We take an internal level of buy side, of sell side. Do you see how you can keep zooming in and finding these levels? Now, something else to pair with liquidity is imagine that, let me draw it. So we're going boom, boom. Okay, so you have your clear buy side level. You're able to identify your buy side liquidity, which is the top side liquidity. You have your sell side level because it is the bottom one, right? So these are our two main external levels. Now we have an internal buy side here. Why is it internal? It is internal because it is inside the external level. And you have a couple internal sell sides. Wouldn't really, these ones are different, but we'll just mark them out. So now, say price does this. Think of liquidity as magnet. Liquidity is a magnet to price. This is something that will help you a lot. So say we take this right here, right? This is where price is right now. We just took internal buy side and we're starting to see movement to the downside. What can you infer about this movement to the downside? You can infer that this, let's see, this looks like a magnet. This is a magnet, think, and you have a magnet up here. Right? So you have these two magnets fighting each other. They're pulling on each other. Think how magnets work. Now, with that reference, if you just took this liquidity, what can you expect the magnet to do? Well, you see, we took this internal buy side level, grabbed up a bunch of orders, and we're starting to go to the downside. As you talked about before, remember higher highs and higher lows. At first, before we took this level, our magnet was here. Why? Because we'd been buying up the whole time. Now you see we're starting to buy down and we get a market structure shift. I will explain that in a later video. So we're starting to buy down. Also a change in the state of delivery. So as you understand that we are starting to buy down, you can expect us to see lower because you can see that this magnet is stronger than this magnet. If you just look at this, but okay, say before this is taken and you have your two magnets, right? If you were looking at this uptrend, higher high, higher low, higher high, higher low, which magnet is stronger, this magnet or this magnet? You would say the top magnet because you were in an uptrend, higher highs and higher lows. Now, if we continue to draw and you take internal level, and then you start to see movement down, what are these that I'm drawing? Higher lows or lower highs and lower lows. Lower high, lower low. Lower high, lower low. Think of it like that. So now where can we expect price to go? We can expect price to go to this external sell side level because the magnet is stronger. That is something that will definitely help you out. Think of it like magnets. Which magnet is stronger, this magnet or this magnet? If you had to guess right now, we will purely guess that if you look at this chart and price was right here, where do you expect price to go if you have your buy side and your sell side level, your two magnets? You would say this level. It's like an arm wrestling match. When someone's arm's this close to the table right here, do you think their arm's going to hit the table? Yes, it's going to be hell of a fight back to do it. Could they fight back and win? They could. But with the information that you were given, you are going to go to this sell side level. That is all I have for you guys for liquidity. It is resting orders that the market grabs to be able to move up and down. Think of it like magnets. It should help you out a little bit. If you have any questions, leave them in the description. Like and subscribe. I appreciate all the support, and feel free to join my free Discord. Thank you so much. God bless.